The first half of 2024 delivered results for Matco's Balanced Fund of 3.5% year to date. Matco's Balanced Fund, as you know, is a multi-asset class investment portfolio carefully constructed using our proprietary investment strategies. The asset allocation of the portfolio is actively managed by Matco's Asset Mix Committee to optimize returns, but also to manage risk. Now, the current investment mix of the Balanced Fund is as follows: 45% in our Matco Diversified Income, 25% in Matco Global Equity, 21% in Matco Canadian Equity Income, and 9% in Matco Opportunities. Now, on the growth side of the portfolio, Matco's Balanced Fund benefited from the strong performance of Matco's Opportunities Fund and Matco's Global Equity Fund. However, Matco's Diversified Income and Canadian Equity Income exposures have lagged. Now, a few notable developments from the first half of the year. Global rate cutting cycle. First off, central banks have initiated a global rate cutting cycle with Switzerland, Sweden, Canada, and the ECB leading the way. The US Federal Reserve remains cautious, seeking more evidence that inflation is under control. Their hesitation could pose a policy risk if they do in fact wait too long. Now, the US equity market leadership would be another. The US equity market is leading the way, up approximately 15% year to date, driven largely by AI-related companies. While we believe AI will contribute to long-term secular bull market in technology, current valuations are a little bit high. The top technology and AI companies, often referred to as the Magnificent Seven, now represent a staggering approximately 31% of the S&P 500. This indicates increased concentration risk. Though they have driven recent positive performance, there's an equal amount of potential downside if they do falter on their growth and if it slows. Slowing labor markets and consumer activity. North American labor markets and consumer activity have both slowed. A continuation of this trend will depend on how quickly central banks ease financial conditions. So, as equity markets continue to trend higher, we do remain a little cautious in our asset allocation. Current equity market valuations are high, as indicated by the lowest equity risk premium in 22 years. While the fixed income allocation within the portfolio hasn't performed well recently, the equity risk premium also highlights a positive outlook for that asset class. Now, given our assessment of the current economic landscape, along with identified risks and opportunities, Matco's Balanced Fund has increased its level of income and portfolio protection. To achieve this, we have increased the allocation to Matco's Diversified Income strategy by 7%, paring back our equity exposure accordingly. Matco's proprietary investment horizon indicator helps us identify when to focus on protection and when to focus on growth. Now, looking ahead, throughout the coming quarters, we will continue to assess economic data and market developments. Given the possibility of multiple scenarios, the fund's diversification, healthy income distributions, and downside protection position us well to navigate the markets throughout the rest of the year as the story unfolds. Our commitment to managing risk and seeking opportunities remains steadfast, ensuring that Matco's Balanced Fund continues to serve the best interest of our investors.